Thanks, Al. Hi, everyone.
Testing, yeah.
Wow, this is bright. Thanks for leaving your water up here, Al. I appreciate that. So everyone, I'm Paul. This is Suha. Yesterday we heard a lot over several sessions from different financiers in the private aviation market, both institutional lenders, predominantly on the private banking side, and then also some private lenders as well. We're going to change lanes this morning, and we're going to talk about the ECA option. And not only the ECA option, but the ECA option in parallel. And the way that we've decided to present this is as an option in parallel, which will help ensure deliveries on time and every time. So myself and Suha, over the next 20 minutes, leaving time for questions, we'll take you through the wonderful world of export credit agency-backed private jet financing. Suha, there's a lot of logos on this opening slide. Do you care to explain?
Sure, and thank you, Al, for saving us last option as the best financing. Thank you. Paul, you want to talk about how many deals we have done over the past couple of years?
Yeah. If anyone knows me, I only represent owners. So Suha is not a client of mine, but it is one of the funding sources which, in situations and jurisdictions which may not be readily available to the lenders that we discussed, ends up being one of the first calls. And so we've done at least a dozen in the past 5 years in this region.
In this region, yeah. 6 deliveries plus 6 PDP financing.
Yeah, that's right.
For the deliveries,
yeah. And some that were PDP and deliveries, and we'll talk about why they're separate types of deals, and then some that were PDP only and not deliveries. But we'll certainly talk about why they're different deals as well.
Sure. Yeah, thank you, everyone. I'm with Airfinance. Quick background on Airfinance. Airfinance is a leading specialist in arranging U.S. Exim-backed financing for the buyers of business jet and helicopters. Even though I am based in Washington, D.C., I come to the region very often to meet with the clients. I'm sure for many of you, ECA financing might sound a little unfamiliar or maybe slightly even alien. But don't worry, you're not alone. When I even with my clients, I see the same attitude, I am surprised to see often how much this useful tool is not being used in the region. So having said that, you're seeing a lot of logos out there. We are working with US Exim for US exports, SACE for Italian exports, BPI Hermes, BPI for French exports, and Hermes for the German exports. And we also are a trusted partner to many of those OEMs in the region. Paul.
So let's start with a little off Slido survey. So you tell us with a show of hands, a good number of people in the audience, who's lost a deal or had a deal seriously delayed in Asia due to financing uncertainty? Okay, a few hands. Who's closed a deal in Asia with any US Exim or any other ECA support?
Perfect.
A few hands more. Who thinks ECA financing is just too slow or too hard? Yeah, a few hands. Who's awake? All right, so let's try to dispel some of the myths. So ECA myths versus realities. You want to start, Suha, with myth number 1?
Sure. I think it's a misconception. Yes, Exim Bank has been known for being the Boeing banks long ago, up until 2012. That's when our firm came in as a qualified advisor to Exim Bank, and we started to do a lot of U.S. Exim Bank guarantee transactions all over the world.
Yeah, I mean, certainly I first came across it in a previous life when I was mostly on the commercial side in Africa, and then when I was doing private jet deals in Africa, it was quite significant. And let's go to myth number 2, which is shown by some of the hands, that it's too slow. What's the reality?
It's not slow. I mean, it's who you work with. It's if you put us in front of a client at an earlier stage, we'll be able to prepare the client for a proper application package, and we'll take the deal through the process. Usually, it takes 4 to 6 months, for the transaction to be prepared and going through the credit committees and approval, and maybe add another month for loan documentation. This is where you come in, but it again could be shorter based on the structure of the deal, based on KYC process, and based on if there's a financial lease or direct loan to the customer.
Okay, so slow, just not too slow.
Exactly. But remember, there's a certainty at the end. We always deliver
Yeah, that's true.
on time, every time. Right?
Yeah, you've never not delivered. Myth number 3 is that the terms are generally inferior to that of the commercial, the institutional and private lenders.
Well, I was going to ask you the same question. So you're doing a lot of commercial deals, and you see our deals. Our deals are usually 80% loan to value. I think it's much better than the commercial term that you guys are seeing. And 10 years tenor, and for excellent credits, we can go up to 12 years.
Yeah,
So.
it's certainly extremely competitive. Again, particularly in those situations where the more traditional routes may not be available, but not only in those.
Correct.
We'll talk about flexibility. Dealing with a government institution, and then dealing with government institution dealing intermediaries does not exactly sound like a situation where you can play jazz.
Yeah, correct. I mean, you're dealing with, for example, U.S. government. So the KYC process takes time, State Department process takes time. But overall, it all adds up probably another month to the process. So it's not too slow. And you have been involved in the loan documentation, so you know the shortcuts.
It's a lot of paper, Suha.
I know.
All right, so let's step back a little bit. How does it, for people that may be uninitiated, how does it work? You've kind of said what the ECAs are. How do they work, and what are they actually looking for in order to part with that?
Yeah, first of all, it must be a U.S. content or British content or French content. That's the number one rule for ECAs to work with. And then it must be an export, okay? And then it must be a credible buyer on the other end. We will need the 3 years of financial statements. We'll go through the process. We are not like private bankers, that talked yesterday, like Chris Miller. We have to have a recourse to the cash flow, to the corporation, to the buyer. Is it the cheapest? In certain cases, yes, especially in jurisdictions where there are a lot of challenges. I'm sure Al would like to know what we are doing in Vietnam. So we are doing deals. I mean, it's out there. It's available.
And what about the financials? Let's talk about the financial statements. In different parts of the world, there are different accounting standards and record-keeping standards. And that, how do you reconcile that with the fact that it's some of the jurisdictions that are most?
But most of our customers have unqualified opinions from international auditors. That's what we like to see.
Okay. In terms of, let me, microphone. All right. Now, here is, we thought this, it's kind of easy to see on the giant screen. Wow. Um, yeah, well, no, you don't, I'm trying to squint to see that. I think we should actually turn around and look at this. Here's a bit of a summary table for export credit in the world of business jets and helicopters as well. I mean, do you want to take us through it? I can.
Yeah, if I can see. Yeah, is it the cheapest? Yeah, among the most competitive in the region, you know,
Yeah, I think you can
on
certainly
a
say
global basis.
it's amongst the lowest for,
Yeah,
for
yeah.
emerging markets.
Emerging markets.
Yeah, I
Yep,
think that's
yep,
very fair.
exactly, exactly. Yeah, but always at the end, you know, all these CFOs compare all-in cost, you know, to the local banks, other lenders, but usually we come out to be the cheapest in emerging markets.
I don't know if someone is trolling us, but it got much smaller on the screen a second ago. That's awesome. Oh,
I'll
you're
look
such a
back.
troll.
So requirements.
Yeah, in terms of
Yeah.
like the 3-year audited financials that you
Financials,
mentioned,
yep,
the
yep.
operating company, what does that mean?
It must be an operating company. Usually, we are having issues. For example, real estate companies. You know, there is one holding company up top. They are doing multiple projects. No, we want an operating company to be able to show us the cash flow. You know, for them to repay the loan, and if need be, we can also get a holding company to, you know, to guarantee the deal. And sometimes we will need the personal guarantees of the owners, but it must be an operating company.
You want to talk about I think it's fair to talk about the fairly extensive nature of the credit review and the risk review.
Yes.
And maybe how that is different for ECA financing compared to the private banks and compared to some of the private lenders.
Yeah,
more
more
onerous?
rigorous process. Again,
That's
3
fair.
years of financial statements, looking into almost every item, and asking a lot of questions back and forth. At the end of the day, it's Exim Bank's decision to approve the loan, so we need to make sure that we have the complete package. Most lenders fail because they just submit the packages to Exim Bank without doing any analysis. Then it takes 6 months to a year approval time, whereas we do the upfront job, we put the package together, complete package, and then give it to Exim. That's why it takes much less with us, Paul.
Yeah, and then how would you draw a distinction between the process for long-term delivery financing and the process for the PDP financing?
Okay.
They're two separate processes. I think it's important to touch on that.
Correct,
I think it's
yeah.
important to talk about PDP in general.
Yeah, yeah. PDP financing is much easier for us to do. We have lenders in the US that are willing to do PDP financings. It takes about door-to-door 2 months to approve the deal and to fund the deal.
Yeah.
It's much easier.
And that's certainly where we've had our successes with
Correct.
Shared clients. It's begun with the PDP
Yes.
ticket.
Yes.
And certainly in that realm, I think the ECA option, the ECA arranged option is certainly the most competitive. So who is it best suited for? I think you touched on this. Is it, there's, in this part of the world, sometimes the line between, not just in this part of the world to be fair, the line between the corporate and the individual is blurred or non-existent. But ECA financing is generally best suited for corporate buyers.
Corporate buyers,
right?
buying equipment, aircraft or helicopters in this case. It's a perfect match.
Corporate buyers in challenging jurisdictions.
In challenging jurisdictions, correct.
Yeah. And if anyone has questions about what we mean by challenging jurisdictions, we can.
You want to talk about documentation a little bit,
Yeah.
How it's different?
It's a lot of paper. It's it's a tremendous. Look, any private jet financing with any lender is documentation intensive. Arguably far more than it needs to be. And you can draw the distinction between English law governed, English lawyered documentation, and principally New York law governed and American lawyered documentation. But your documentation is
Not
New
mine.
York
It's
law.
Exim Bank's law.
Yeah, it's and including for the PDPs with the
correct.
American lenders. Do you want to name the American lenders that you do the? No, okay, we're not naming the American. that tend to be American, and so it's New York law driven. I mean, it's heavy. I don't need to do a plug, but like there's a lot of good lawyers that people can use that can know their way around the documentation and not stumble over themselves like morons. So yeah, that's documentation. Let's talk about the structure.
Yeah. Um, there are usually SPVs involved in the process. In Delaware, we set up an SPV, and depending on the jurisdiction, either it will be a finance lease directly into the borrower's country, or we have to have another entity in between to have a finance lease there, and then they do an operating lease back to the end user.
Yeah, it's not old adage. It's not rocket science structures. We're talking fairly simplistic, structured finance, like grade school level that really anyone can understand, especially if they've got capable counsel. Yeah, okay, that's. For a 44-year-old, I need glasses. I can't see. Is it, when is it worth it? I think that's the main point of this. When is it worth it?
When the liquidity is tight in challenging jurisdictions, and using ECA financing usually will give borrowers extra, incremental borrowing capacity. So it's cheap, it's available. So
I'm going to move to the funding sources. So I think this is a good slide that I think we borrowed from one of your other presentations about the approximate number of aircraft that were sold, worldwide, around 730 new business jets that were sold in the world. And then the funding stock is, and I'm sure this was discussed in the room yesterday.
And this was based on Perplexity.
Perplexity,
not
yes.
ChatGPT.
Not ChatGPT. This is based on Perplexity's search of the interwebs.
Yes.
Using the Googles. So, we talked, I'm sure people talked about this yesterday, cash, bank, debt, lessors, op lessors, and then, the export credit market. Do you want to have a couple of words about this?
Yeah, I mean, as OEMs, their job is to sell the aircraft immediately. So their number one go-to source is cash. Hey, well, you have a cash. Let's do the deal right now. And then the second option is local banks, private lenders, and usually we are the final option, but as Paul said earlier, let's put our option also at the beginning and run a parallel course.
Yeah, and I mean, and I'm sure this would have been discussed yesterday, but, I can tell you an extremely low percentage of my transactions involve financing at the moment because the clients don't need the funds. They may consider them expensive. They may want to not, lift the proverbial kimono. So, I mean, at the moment, that's sort of, and I think that's reflected in here in terms of the percentage of financing. But all it means, and anyone that remembers the sort of the heyday, there is much more. It was rare that there was a deal that didn't have financing. So it just means that there's a larger pipeline for aircraft to be financed. But what you're principally concerned about with ECA is new aircraft or new-ish.
Correct.
Yeah. Should we talk about the ish part? No? Okay. Fairly new from delivery.
Perfect.
Okay. Let's talk about cases and points here in Asia.
That's what Al wanted to see since yesterday, right? So I'll just go into the deals. So we did, with one client, 3 deals, two G650s and one G700 for the same client in Vietnam. So Exim Bank really works, and they're very active in that region. And then 7 Cessnas and then 2 Pilatus in Indonesia for one of the largest operators. When they started, they had nothing, and we believed in them. And the owner had another business to guarantee the loan, So he's our best ever customer, and he paid off everything perfectly. So now I'm talking about financing Sky Couriers for him, An interesting market for us is also Mongolia. We financed Airbus helicopter there. I have 2 on the go also. So these are all done through ECA financings. So this product really works.
Yeah, and again, particularly in cases where, I mean, I think the example you were giving is, challenging jurisdiction, unrated sponsor, and a new/newish aircraft.
Yes.
Okay. I want to leave time for questions, and I want to be on time. So I think this is sort of really what it comes down to. I think that if you take anything away from this presentation, other than the fact that both Suha and I are going blind, is to run the ECA option in parallel with your other financing options, and don't leave it too late in the game. So do you want to, should we go through this? It's
I think it's self-explanatory.
yeah, I think so. I think it's important to reframe that ECA, this type of ECA financing isn't a subsidy. It's effectively a risk transfer for non-payment or default or political instability. And the parallel path, as we've sort of mentioned, is really start at the LOI stage. The LOIs are free, right? I think it's important to
Yes.
point out. And there's, I'll be frank, there's pricing leverage to be gained if you start early and sort of avoid, help yourself by avoiding delivery delays.
Because of the time differences, Paul, I'm sorry to interrupt you.
Yeah, it's a good point.
I spend my nights in Washington, D.C., talking to the clients here, going over the LOIs, how it works, all these terms.
Yeah.
These guys never heard ECAs, so I have to really explain, and convince them that it works. So since we have done a lot of deals, they trust us. And I also have to give credit to a couple of OEMs, really, because they know it works, and they put us in front of clients every time, all the time. At the beginning, then I spend my LOIs immediately, and I talk to them overnight, as I said, and I get these mandates,
And again, the proof is always in the pudding. It's I think that figure that you give is quite relevant. Exim has done over $1 billion in.
We did that, and
Yeah.
and we also had done the
Here.
Minsheng deal, China deal, long time ago,
Yes.
for like 20 Gulf streams.
Yeah, that's right. That's where it started. Okay, I like my law practice, on time and really over budget. So we got 2 minutes left for questions, if any. We got a lot of expertise on the panel, so shoot away if anyone's got any questions. If not, we'll move on to the next. I think it's about tariffs.
Would one have to use ECA over a bank?
Good question.
Again, it depends on the jurisdiction, and I would say pricing, and I would say loan to value, and I would say certainty for financing on the delivery date, and I would say we can also add value with the PDP financing.
Yeah, in my view, as kind of advising owners, it would be sort of PDP financing first, and then you haven't touched on this, but there's occasions when, for certain owners, it benefits them to be doing business within the United States and with the U.S. government in particular. It's a sort of a less tangible, but certainly that's been the cause for a couple of our conversations.
It's a great point.
My advice to clients.
Because once you have a loan from the U.S. government, it's on your balance sheet, you're going to attract more lenders come and knock on your door.
Yeah.
It gives you more credibility.
And look, I'm one of the last things I did before we got up here was scrolling CNN, and apparently the U.S. government's about to shut down for the gazillionth time.
I think David was going to ask that question.
Oh, so that's
Here we go.
okay.
Here we go.
Beat you to it, Dave.
That's my
Hernandez.
question. I could still ask it again. Nah.
Dave Hernandez asked the wonderful questions because he's brilliant and a great lawyer.
Yeah, I think this is
I didn't pay him for that.
14th shutdown
No, stop.
since 1981.
I didn't know it was that many.
Yes, and last shutdown was during the, unfortunately again, first Trump's administration, and it took 34 days to come back. I did some homework. I knew David was going to ask that question.
You did.
But we always come back. Exim always comes back.
Yeah, I think so.
They can't afford to
Absolutely.
shut down. We have Boeing deals on the line, so you can't do that.
Good. We are exactly out of time, but any other questions?
David, do you have a question?
No, that was my question. I was talking to him before this, so he kind of scooped me.
Talk to me, David. Good. Well, listen, thanks, everyone. We're exactly on time.
Thank you very much.
Thank you.